The key message from the market right now, based on early morning Seoul time, is very clear. The issue is not simply the war headlines themselves, it is the surge in oil prices that is now translating into real cost pressure across financial markets. According to the latest futures data, US S&P 500 futures and Nasdaq 100 futures are showing downside pressure. At the same time, Korea's KOSPI 200 futures are not providing a strong signal of relief compared with the cash market. Oil prices have already moved sharply higher. WTI is approaching the $90 level, while Brent crude is trading around $92. At this point, markets are no longer treating this as just a geopolitical headline. Investors are beginning to price in the possibility of inflation accelerating again. In the United States, signs of a slowdown in employment are becoming clearer. February non-farm payrolls have turned negative and the unemployment rate has moved higher. Normally, such data could support expectations for Federal Reserve rate cuts and provide some relief to equity markets. But this time, the key variable is oil. If energy prices continue to rise, the Federal Reserve may face a difficult situation, watching economic growth slow while still worrying about inflation. That is why US equities could remain highly volatile tonight, especially in technology stocks, unless oil prices stabilize. The Korean stock market is even more sensitive to these dynamics. South Korea depends on the Middle East for roughly 70% of its crude oil imports, and recent market shocks have already been accompanied by a weaker Korean won and unstable foreign capital flows. In other words, tomorrow's Korean market will not simply follow the direction of US equities. Investors will have to watch oil prices and the exchange rate at the same time. The market could open weaker. Even if semiconductor stocks remain relatively resilient, the broader index may still face pressure from rising import costs and foreign futures positioning. However, the situation is not entirely pessimistic. Korea's semiconductor export momentum remains strong, supported by global AI demand, and economic growth expectations have recently been revised upward. If oil prices do not spike further, we could see a technical rebound during tomorrow's session after recent declines. Ultimately, the key variable is oil. If crude prices stabilize in the low $90 range, markets may attempt a rebound. But if prices push higher toward $95 or even $100, the market is likely to shift back into a clear risk-off mode. There are three key checkpoints to watch tonight in the US market and tomorrow in the Korean market. First, whether oil prices continue to surge. Second, the movement of the US dollar and the Korean won. Third, whether US futures, particularly Nasdaq futures, begin to narrow their losses. If these three factors stabilize at the same time, the Korean market could attempt a rebound. But if even one of them deteriorates again, tomorrow's market will likely favor a more defensive approach.